Hi guys, good afternoon. I'm Karunya Rao and with me is Manisha Gupta and we're back to give you a quick update on what's happening in the commodity space. All eyes today on rubber prices and Manisha, the last time I think we saw these prices was back in the end of 2020, I guess. What's happening and why is the price at such a low point?
See, I think the major cues really seem to be coming in from China, and we're trading at a 19-month lows, as you mentioned. So there are weak demand prospects. Also, do not forget that this is a peak tapping season as well. So we are on the high season. The supplies are really coming in, and that seems to be weighing onto the markets as well. The Chinese data does not help. When you look at the overall vehicle sales there, auto sales that is, we are looking at 500,000 units of a decline estimates for this year. The commercial vehicles also are expected to see a decline of nearly 16% in this year in sense of sales, and that's weighing onto the markets. So when you look at the prices itself, we are down 3% on a week-on-week basis, 7% down in last 1 month, and year-on-year basis as well, we have turned negative by 13%. So yes, some bit of a pressure continuing in this space.
What does this mean in terms of raw material costs, especially for tire companies? Many of them are listed as well. Is it good news perhaps, which could start reflecting with some kind of a lag effect?
Oh, absolutely. Karuna, actually, I was looking at, I was thinking your way. So I was looking at some of these tire company stocks as well. And this week, they seem to have done quite well, anywhere between 5 to 12% of gains in many of these tire stocks. So, well, yes, the decline in rubber prices, the raw material definitely seems to have worked wonders. Actually, when you look at the last 3 months itself, for the month of June, we saw rubber prices at 177 rupees per kg. It declined to 175 in July. And August, the premium, or rather the average until now, is at around 167 rupees a kg. So it has been quite a bit of a decline that we've been looking at in rubber prices on a month-on-month basis. And as I said, this is peak arrival season, peak supply season is the reason you're looking at decline. Otherwise, the latest report from Rubber Board of India does show that while the production is expected to increase in this year, the consumption also is expected to go higher, and they are expecting good demand to come in from auto and other good related areas which consume rubber.
Absolutely, and for those of us who don't track the auto space closely, just to flag off, it's the replacement demand that has come back very sharply. So on back of that, I mean, definitely, like Manisha also flagged off, the rubber, the tire makers will definitely gain because of the demand and because now the raw material prices have eased so significantly. But what's the way forward like? Is it a temporary blip or some kind of selling that the kind of selling that we're witnessing, or could it continue to be weak for the next few months as well? What's the forecast like?
So when you look at the rubber prices itself, yes, there could be some more decline that could be coming in because the rubber arrivals are still on the higher side. You will want to look at the rubber overall production. While the Rubber Board of India does tell you that 850,000 tons is what we could be looking at in sense of production, which is higher on an year-on-year basis. But the consumption run-up is quite strong as well. So when you look at 2021, that is the last year, you had 12 lakh tons of a consumption expected. This year is expected at around 12.9 lakh tons. So we are looking at a big jump up in sense of consumption here. Auto sector, last year the growth was at around 3.2%. This year is estimated at 15.9%. So, well, yes, when you look at replacement demand or the overall auto demand coming in, it is looking at a higher number. And, and we all know that 70 to 75% of rubber demand does come in from the auto sector. So that is where your major cues will come in from. When it comes to the other goods in sense of rubber, last year was a contraction of 16%. This year, the demand is going to expanded by 5%. So the rubber board numbers, if that is anything to go by, yes, these are good levels to start buying. The expectation is that you could be looking at higher rubber prices, higher rubber consumption, higher auto demand as well. So on all aspects or levels, it does look positive.
Is there a range for rubber prices that you want to flag off that traders can watch out for?
So the expectation is that we will not see a break of 160 at max 158 perhaps, and that it would be perhaps the bottom in case of rubber prices. The expectation largely is that we will see a strong rebound coming in. Since India does not produce enough for its own consumption, we do rely on imports quite a bit. And the international markets, if the Chinese demand starts to come down, then there is going to be that much of rubber being available. Also, in case of Indian markets, we have a big rubber import duty as well. So there are quite a bit of a concerns there. And the expectation is that we are close to bottom. At max, 165, 160 is where you could see support coming in.
Okay, well, good news coming in then for tire companies and people who are invested in that space. Good up move seen on the stocks as well, in complete inversion to what the completely inversely proportionate to what the rubber prices have been like. With that, we're going to wrap up on today's chat on commodities. Thank you guys for tuning in. We'll be back on Monday with a fresh new update.